What's going on, everyone? Hootmoney here. Today we're talking about Xela Technologies, ticker symbol XELA. I like to just call it Xela, so throughout this video I'm just gonna be calling it Xela. Drop a like on the video if you guys enjoy these analyses and updates. Subscribe to the channel if you guys are new, and let's just get right into it. Alright, so essentially what we're gonna be going over is this SEC filing right here. Offer to exchange up to 100 million shares of its common stock. This is what's been getting all the hype. This has been what started this rally in Xela Technologies, or just Xela. I'm just gonna call it Xela for now on. So we will be going over that. We're also going to be looking at the fundamentals of the company. Then we can do some speculation. But first, I want to thank the sponsor of today's video, which is Moomoo, a licensed FINRA and SIPC broker. They're doing an amazing promotion where all you have to do is deposit $1 on their platform. You can get up to $7,000 in free stock. I've seen people get shares of Apple. You can potentially get shares of Google, Amazon. It's an absolute no-brainer right now. Also, they have another promotion where you deposit $100, get a free share of AMC stock. I personally think this promotion is phenomenal, way better, because you deposit $1, you get up to $7,000 in free stock. So it's definitely worth checking out. There's a link below in the description or pinned comment section of this video, and let's just get right back into it. So essentially what the offer is that they are going to buy back 100 million shares of their common stock. Now, typically when a company does buy back stock, that is bullish and the share price goes up. So that is why we've been seeing Xela stock go up in price. A lot of companies, instead of issuing a dividend, they like to reward their investors by buying back the stock. So that is essentially what Xela is doing. Instead of issuing a dividend to investors for investing in the company, they're going to buy back the stock, and in result, the added buying pressure should, in fact, bring up the share price. So that's typically how a share buyback works, but this is a little bit different. So instead of just using cash to buy back these shares, they are issuing a bond, essentially, that's due March 31st, 2029, $100 million worth. So that would essentially put one share of Xela at $1, using the principal amount of the bond they're giving in exchange for the shares. And they're only doing it in increments of 25 shares of common stock in exchange to a principal amount of $25 of their senior notes. So you as a shareholder can offer up 25 shares and in return receive $25 of principal of their senior notes by tendering your shares. And then this offer will be ending on February 24th, 2022. So scrolling down here on this offering, we can actually jump into the risk factors section, because when you're not dealing with cash, like a cash buyback, it does get a little bit tricky, because obviously a company can potentially default on a bond, right? And they don't pay back the principal amount of $25. Also, these notes fully mature in 2029. So that means that you don't get your principal amount, that $25 back, until March of 2029 when the bond fully matures. So quickly looking at the present value of this bond, you put in the face value, the coupon rate, the annual coupon rate, the risk-free rate. So this is the 10-year treasury rate, right? Because this is your opportunity cost in there. Then the years to maturity, and then when the coupon will be paid, quarterly, twice a year, annually. In our case, it is quarterly. This brings us to a bond price now of about $31.68. So technically, although it looks like you're getting $1 for $1 of Xela stock, you're really getting a little bit more. In present value terms of this bond, you're getting about $1.27 for Xela stock. Now again, just because it's worth $31.60 doesn't mean that you can get a buyer to pay you for those notes, because there is no active trading market for those new notes. There's also risk involved, because Xela may not be able to pay back these new notes. So even though in a everything perfect world these bonds are worth $31.68, you probably won't want to pay that much money for them, because you're taking on risk of loaning that money to the company and them potentially not being able to pay it back. So with that being said, we should look at the financial statements of Xela to really see if they can afford to pay back these notes or not. So first things first, their balance sheet, they have $146 million in cash, which is pretty good right there. Another $187 million in accounts receivable, $16 million in inventory. They have a few other current assets, putting them up to a total current assets of $401 million. So based on what I'm seeing here in the current assets, I do not believe they'll have any trouble making these interest payments for the time being. Now for current liabilities, they have $59 million accounts payable, $206 million in accrued expenses, and then they have $85 million in other current liabilities, putting them at total current liabilities of $474. So they have more total current liabilities than total current assets. You guys can see about an excess of about $73 million right there. That's not good. These are obligations that are due within a year. So its current liability essentially means that the company needs to pay $474 million within the current year. So you always want to see a company that has more current assets than current liabilities. And this company just doesn't have that. That puts them at a current ratio of about 0.8. which is not good. You want to have a current ratio of over 1. This company also has a lot of long-term debt already, $1.34 billion worth. If we're just looking at the market cap of the company, $156 million, they have a lot of long-term debt on their books, meaning that they're already paying a lot of money in interest payments on their income statement. So that can bring us into the income statement right here. You guys can see that their interest income is about $42 million per quarter. Now that's an expense because it's a minus. So they're losing $42 million a quarter in interest expense, and these notes are going to increase that interest expense. Since it's a 6% interest rate, they're paying it 4 times a year. We divide that by 4 right there. We multiply it times $100 million. Because that's the principal amount, and this will be raising their interest expense by $1.5 million per quarter. It seems like they will be able to afford that. Another thing about their balance sheet right here, which I'm not a huge fan of, is they have $1.18 billion in total assets. A lot of this has to do with goodwill and intangible assets, which aren't real tangible assets. It's not like having cash on your balance sheet. It's not like having a government treasury on your balance sheet. Goodwill is essentially the excess amount of money that you pay for a company other than what it's worth. So it's not really a real asset. Intangible assets in general are things like intellectual property like patents and etc. So they're not like actual tangible cash, something that you can convert into cash very, very easily. And in my opinion, a lot of times they're almost fake assets. So that would honestly bring down their total assets to about 0.6 or 0.7 billion. And then looking at their total liabilities, there are already more total liabilities than total assets that they already marked down on their balance sheet. Their total liabilities is 1.91 billion. So this puts shareholders at a total equity value of minus $733 million. Essentially what this value is if the company liquidated all their assets and they sold it and they distributed their capital to shareholders equally, shareholders wouldn't be getting any money, right? Because this company has negative equity. Now, don't worry, that doesn't mean you'll owe money if Xela goes bankrupt. It just means that they're not necessarily in the best financial position. It just essentially means that the company does have to dig themselves out of a pretty deep hole, but this is also where you can find some deep value opportunities in the stock market. Some companies that are over shorted, they can end up surviving longer than Wall Street would anticipate. This could create some epic short squeezes. So going back to the point of exchanging your shares for these notes and how that has risk, looking at their financial statements, we can see that the company is not necessarily in the best financial position. So there is definitely some increased risk in the company not being able to deliver on these notes. But at the same time, the notes are a very, very good deal for current shareholders. So you have to weigh out your risk to reward here. Do you think the company is likely to continue to operate until 2029, making these notes essentially a very, very good deal? Well, a bunch of insiders do believe that the company will in fact continue to operate and be a good company, because in December, around December 9th and December 10th, we saw tons and tons of buying from the director, president, chief financial officer, the CFO, and they all bought a ton of these shares. We're also seeing the company in a relatively oversold position using market cipher Heikin-Ashi candles as well to judge the momentum, so it could in fact get a rebound based off of the technicals here alone. It also only has a 150 million share float, so that could also lead to a bounce as well. Personally, I will not be participating in this exchange of 25 shares of common stocks for $25 of principal on their senior notes that are due in March of 2029 for a few separate reasons. First and foremost, I don't feel like waiting until 2029 to get back my principal. I'm not a bond investor, right? I'm not trying to make my wealth through getting high yield junk bonds. Essentially, that is what this is, right? I like to invest in high growth companies that probably don't have as much debt as Xela Technologies does right now. And for that reason, I just don't think the risk is worth the reward. I think that there are plenty of opportunities to take on risk and get absolutely outstanding multi-bagger returns in the market. And this would not even be a multi-bagger return. And I'm taking on a decent amount of risk. And I have to wait a while. 2029 is a while to receive that principal back. I also never invest in companies with a current ratio under 1, because if you can't meet your short-term liabilities as a company with your assets that you have that are liquid right now, so your current assets, you're not necessarily a financially healthy company. You should always be able to meet those short-term liabilities as a company. It really looks terrible to have a current ratio under 1 for your company. And then the last reason is that their intangible assets plus their goodwill make up about 40% of their total assets, and they already have more liabilities than total assets on their balance sheet, giving negative shareholder equity. It would be even worse if they didn't have those intangible assets and goodwill on their balance sheet as well. So overall, I'm just not a huge fan of the financial position of Xela Technologies, and for that reason, I just think we're taking on a bit too much risk by buying those junk bonds, essentially exchanging your shares for those bonds. If you're playing it for the swing trade that we're seeing on the stock currently, go for it. It's always fun to trade the volatility. There's tons of volume and volatility on this stock. It's definitely a good one to day trade, and on longer time frames, it is definitely oversold, meaning that momentum could easily push in that upwards momentum in the upwards direction, in the short term. So really, it's a pick your poison type play. I definitely think the short term momentum is a bit more promising than the long term value of these bonds, but really is up to you guys. I hope you guys have enjoyed this video. Drop a like if you guys did. Subscribe to the channel if you are new. Also, check out Moomoo, the sponsor of the video, if you want up to $7,000 in free stock as long as you deposit $1 on their platform. You can do it using the links below in the description or pinned comment section. Also, if you want all of my buy and sell alerts as well as exclusive due diligence, a private Discord channel with me and other VIP members, there's a link below, first link in the description, for VIP trade alerts, Hootmoney trade alerts. You can check that out. Join the Hoot gang, Hoot family. Anyways, guys, I'll be seeing you guys next time. Have a wonderful day. See ya.